I suppose probably from a mental point of view, there are farmers who are really under the cosh and just looking at what other options are available to them.
Hello and welcome to Agri Focus. I'm Stella Meehan, and today in studio I'm joined by Chartered Valuation Surveyor Dillon Murtagh from Murtagh Brothers to discuss farmland prices and land rental prices across the country. Now, last week, the Society of Chartered Surveyors Ireland, the SCSI, along with Teagasc, published the Agricultural Land Market Review and Outlook Report 2024. Among the findings of the report is that the national average farmland sales prices are forecast to rise by about 6% in 2024. Last year, average land rental prices increased by 5%. Also, the average value of non-residential agricultural land in 2023 was €9,300 an acre, an increase of 11% on 2022. In 2023, national average non-residential farmland prices ranged from €6,286 per acre for poor quality land, all the way up as far as €12,300 odd an acre for good land. Now, of course, location played a factor in this, and we will discuss that a little later on. But firstly, Dillon Murtagh, talk to me generally about the value of farmland in Ireland. Is it good news if you own it?
Good news overall. I think anytime you see that prices are increasing, it's positive. It kind of indicates that farming is generally in positive territory. I suppose it's good to do these reviews and see what trends are happening out there. And there's some very interesting items in the report. I think you can probably see that if you draw a line from Limerick to Dundalk, that's everything kind of south of that is kind of predominantly impacted by dairying, tillage, while everything north of that is kind of sheep and cattle rearing. And with that, then the price of those products in the market, it dictates how land prices are going. But yeah, it's I think interesting to see that again. I think Waterford this year was the highest priced at 20,000 an acre for good quality land, and probably just indicative of so little land coming on the market in that area, and that's pushing the price up. But I think overall it's positive.
And what about the forecast then for 2024 in terms of land values and prices? Why are they forecast to increase these prices?
I think probably, I suppose, milk has stabilised. I think that tillage is probably the one outlier at the moment. Had a poor year last year. This year, the weather, we all know, is kind of having a huge impact. It's probably going to be a very difficult year for them. Unless we get a very good back end, it's going to be a difficult year. But I think dairying is steadied. I see where Teagasc are indicating this morning that their prices are going to stay pretty much the same for the rest of the year, but it's positive. I think that the one thing that's probably pushing on this year more so than beef prices have increased, lamb prices have increased, that's given a little bit more confidence to people. You've got nitrates directive, which is impacting, and that's pushing farmers to look at their stocking rates and need to deal with that. So there's a lot of pressures on this on land prices, but with most produce prices good, that's pushing into the mind of farmers, and they're looking to, if possible, buy. If not possible, they're looking to lease or rent land.
Yeah, because the report showed that I think it was almost 70% of the buyers for land in this country, a lot of agents and surveyors and so on would say are from the dairying category. And I suppose the next big buyers then would be tillage after that. I expect that to probably continue, as you mentioned there, with the nitrates regulations.
I think so. I probably, dairying had a bumper year 2 years ago, and that probably gave a lot of dairy farmers ammunition to go out into the market and try and expand. And tillage is under pressure at the moment. I possibly can see that some full-time tillage farmers will probably try and just scale back a little bit going forward. But we're seeing a lot of investor-type buyers who are buying land with a view that tillage is an option for them. So that's kind of something that we're just seeing on the ground. how much that will play into the figures going forward. But I would expect that possibly tillage buyers will be a little bit less going forward, just because weather has had such an impact and because grain prices are back.
That's true. That's one area of difficulty for the tillage farmer. But I suppose, is there also a difficulty for the tillage farmer who potentially wants to buy land in terms of the competition then with the dairy sector?
Huge competition. And you would have the natural impact of that as well, is that there are some tillage farmers out there looking at, maybe I should change over to dairying, especially the younger next generation coming through. And maybe they're looking at the finances and going, okay, we've always been in tillage, but we have very productive land, generally larger holdings, and maybe it's suitable to look at dairying as an alternative. I think it's probably the dairy sector with that regular paycheck. It gives them a little bit more certainty. It gives them confidence when they go to the bank. They have a business plan. Their banks will look more favourably on them than probably any other farmer who's reliant on maybe one or two paydays in the year and trying to carry their enterprise through that. But yeah, dairying is having a big impact across, and will continue to.
You mentioned there that some of the tillage farmers might consider maybe going into dairy for that more consistent or more sustainable long-term income coming in. But I suppose this year in particular and the last 10 months will have shook a lot of tillage farmers as well, who saw, if this is the way it's going to continue to go, be it for climate change or for whatever reason, and they're slaves to the weather and their harvest and their yields could be vastly diminished, there isn't really that, sort of certainty or consistency going forward that they can guarantee that they will have the incomes the same every year.
I think probably more similar to dairying, but the tillage farmers are reliant on world markets. We've had a poor year last year. It's a very poor start to this year. You do have those. It's cyclical. It does happen. I think if you talk to any tillage farmer out there, or any farmer for that matter, they'll tell you about this year and that year that were particularly poor. We got through it. But it does kind of use up resources. And I suppose probably from a mental point of view, there are farmers who are really under the cosh and just looking at what other options are available to them. I think most farmers, they've grown up farming. The enterprise that they're in is probably something that has been handed on to them, and that's what they're used to. So making the change is not simple, but I think you have to look at all options at the moment.
And Dillon, let's talk then about the farmers who maybe don't have, the capital up front to purchase, or maybe, just can't get the overall finance from the banks, and they decide to go the land of renting or leasing. Let's talk about the rental market. It wasn't just sales that saw an increase in price, according to this report. The cost of renting land went up. Is that likely to continue?
I think probably nationally, the average will probably increase slightly. I think last year it did soften. So the beginning of the year, so 2022, we had bumper prices. Going into 2023, it continued until kind of milk price starts to drop in March, February, March of last year. And you could see that have some impact. I think probably the big issue at the moment in land rentals and leasing is that it's favourable for owners to lease land. It's very tax efficient to do that. But it probably means that land generally is out of the market then. So you lease it for 5, 7, 10 years, and chances are when that lease expires, the very high chance that will be released to the farmer again. Because the owner and the farmer have got on for 5 or 10 years or whatever the period is, rents have been paid, everyone is comfortable with each other, it's very unlikely that will come back on the market. And because of that, each year we're seeing less and less new land coming on the market, and that's having an impact. So I would say overall there's less land available each year for leasing or letting, and that's impacting on prices, pushing prices up.
Of course, it is a supply and demand thing, and agricultural land in this country is finite. It's not infinite. I mean, there is only a certain amount of land. And so the land that does come on the market now, would you primarily see it maybe for if a generation finishes up farming, or else, perhaps there's a death and the inheritance goes on and it goes on to be sold from there if someone doesn't take over the land?
So before leasing and the tax changes came in for leasing land, if, there was no further generation coming behind, somebody had passed away, chances are that farm would be sold, put on the market and sold. Now with the leasing arrangements that are in place, it means that the next generation maybe can hold on to the family farm. They're not farming it themselves, but they don't have to make that decision to sell something that, generations put together. They can lease it, they can get a tax-free income out of it, and it pushes that off the table. So they can hold it that way. Like all things, good quality land in good locations, there will always be demand, whether it's to buy or to lease. It's and as you say, it is a finite resource. Probably we're seeing as well that there is going to be impacts from forestry. Price has increased significantly in the last number of years, and then there are other options there for solar farms, wind farms, those sort of things, which is putting further pressure on land. We only have so much of it going around, but if you have the government have stated presented targets for forestry, anaerobic digesters, solar farms, wind farms, they're all pulling from that finite resource and putting pressure then on the traditional farmers, we'll call them.
And the difference then between, we say, good quality land and maybe poorer quality land is, in the report and in your own work, are you seeing that across the county or primarily across the country on average? Could you see very good quality in some parts of some counties and then other parts poorer quality? Is the poorer quality maybe being leased or sold for the likes of wind farms or solar farms and so on?
Yeah, I suppose you do definitely see good quality land, no matter where it is in the country, will be sought after. There's probably more demand in that kind of South Leinster, Munster area, just because of the intensification that is there. And a lot of it is probably from dairying and tillage, which traditionally the dairying is strong. Tillage, we've discussed, is suffering a little bit at the moment, but they tend to be fairly large holdings and in a position to buy. But yeah, you do see a difference across the board. Good quality land is always sought after. Poor quality land, there are some options there. It depends. You could have poor quality land that is very well located in terms of infrastructure, in terms of close to power plants, different things like that maybe would allow it to be used for a solar farm, wind farm. Some areas of the country, wind farms are not been encouraged or not getting through the planning process. Solar farms seem to be a little bit less controversial. Anaerobic digesters are the thing coming. We'll see how they progress through the planning system, but they will take a lot of productive farmland out of traditional farming. So we'll see that. But I think poor quality land, there are some other options there. We're also seeing probably some impact from the designation of SCSIs and NHAs, so special areas of conservation, special protection areas, national heritage areas. So that does limit what, if your lands happen to fall within these areas, it does limit maybe what you can do on some of those lands. And so that's also having an impact on price then, naturally.
With the, I suppose, the advent of all these things coming down the road, like, as you said, solar, wind, a lot of renewable energy, in other words, and we have a national biomethane strategy that's supposed to be brought out by the department as well in the near future, which will probably really propel the sector of anaerobic digestion. Is all of that boding for meaning tighter supply of agricultural land in this country? So is it only, essentially, is the arrow only going in one direction, Dillon?
Probably is. I think, there's pressures from all sides. And inflation, is having its impact as well, and you can see that. But yes, there are alternatives there to the traditional grazing, sowing crops sort of farming enterprise. That's not the only show in town now. So there will be further pressures there. I still think that probably better quality land in certain areas will always be sought after for prime agricultural purpose. But yet, all these renewables are putting pressure on things, and forestry as well.
Forestry, yeah, that's true. The blocks of land that are being sold, like once upon a time, farmers always tried to get blocks of land close to their own land bank, as in for logistical reasons and consolidating their own land bank. But I've noticed just myself in recent years, farmers are having to travel. I mean, between blocks of land, either that they're leasing or that they've bought. Is that becoming more common now as the supply gets tighter, that farmers are having to venture further to get land?
I think so. You certainly do see it in certain areas. Farmers are willing to travel purely because either they're in an area where no land comes available, or they're in an area which the land quality is just unfortunately poor, and so they're travelling to try and get to better quality land. I do see also that it was very much at one time the dairy farmer wanted the field next door and didn't want to. He'd pay a huge premium to either lease or buy land immediately adjoining him. Mm-hmm. But now with contractors, with efficiencies in that, they're willing to travel further away. Good quality land. Okay, it's not something they can walk a cow to, but it has other options for them. So it's people are willing to travel. Contractors are willing are getting more efficient and willing to travel as well. And farmers are looking at other options.
And finally, Dillon, is there any advice you can give to farmers seeking to acquire land now going forward in what will probably be a tight market with increases? Should they act sooner rather than later?
I think it's that comes down to each individual. I think probably one thing I would say that probably a lot of farmers need to look at their long-term. Are they handing on their farm to next generation? Is there interest there? That will dictate a lot as to how they will proceed in the next 5 or 10 years. If they're lucky enough to have that next generation coming behind them that are showing interest, probably, I think expansion is the way to go. I'd naturally say that, I suppose, is probably the argument there, but I think probably efficiencies of scale are necessary to be profitable. And unfortunately, it's that's having an impact. Leasing land or renting land is probably a good short-term option for farmers. It gives them the ability to expand and wait maybe for a better opportunity. But I think most farmers, that have and want to continue farming and pass on to the next generation do need to look at expansion.
And as you said there, the leasing is a good option, particularly maybe if someone did inherit land or has been left land and isn't sure yet of what to do with it. There's plenty of farmers out there looking for lease agreements. Exactly.
And they'll pay very good prices. We can see prices have risen, and we expect probably nationally will continue to rise for leased land. So it is another option there that means they don't have to necessarily sell, and they can review then as they go forward. It also gives the farmer coming in that certainty that they have a long-term lease, so they can invest in that property. They can, put money into the land, into the fertility, on the basis that they know they have it for 5, 7, 10 years. And probably most would acknowledge that if they're in there and they're doing a good job, chances are, if it's going to be leased again, they're probably in pole position to lease it again. So it gives them another option.
And one final question, actually, Dillon, before you go, a little outside more of the non-agricultural, is that if there is somewhat residential element on agricultural land and someone wishes to sell, what is the advice coming from agents or firm surveyors? Like, should they sell it as a block with the residential? Should they try and do the residential separately and then sell the agricultural land as non-residential agricultural land?
I think that's one thing, I suppose, about the report. It's purely non-residential land prices.
It is. There's no residences on them.
Which is good to just see that and stripped out. I think we are in a housing crisis. There's huge demand for residential properties. Most likely, the better way to sell a property is to sell the house out separately from the land. Most farmers are not interested in being landlords. Most people who are looking for a house, unless they're from an agricultural background, are probably just looking for the house and not really interested in the 10 or 15 or 20 acres that attach with it. Now, there will always be those other type of properties that maybe are best suited or can't be divided. But I think if on a broad, if you were to say broadly, you'd say try and separate the house out from the land. It's probably going to achieve the better price overall to do that.
Absolutely, and to get advice anyways is the main
exactly,
thing.
Yeah. Talk to your local auctioneer and seek advice and seek it early. It's not something you want to make snap decisions on.
Absolutely. Well, that's all we have time for, I'm afraid, on AgriFocus for this week. I want to thank my guest, Chartered Valuation Surveyor Dillon Murtagh from Murtagh Brothers, for joining us on the podcast this week. Please do rate and review the AgriFocus podcast on Spotify or Apple Podcasts or wherever you get your podcasts, and do share it with anyone you think might be interested or who is in the property market looking to sell or looking to buy. Until next time, goodbye and take care.